Good afternoon, everyone. Welcome to Pharma Business Forum. I am so excited to be part of this discussion to unearth some of the challenges pharma business face due to funding. I trust this is going to be an interesting discussion. My name is Kate Quinn-Deforson, and I'll be your host for this event. There are several challenges businesses face, and key among them is the funding challenge. One of the biggest challenges in our part of the world is collateral to serve as security, and banks are unwilling to grant loans to startup capital. I'm privileged to have in my midst Mr. Samuel Donko.
Thank you.
And then we have Mr. James Orakatete. And then we have Mr. Anthony Owusu Anan. And then last but not the least, we have Mr. Daniel Ewuzi Odum. Gentlemen, you're all welcome to the show.
Thank you very much.
To our audience joining us virtually, we welcome all your questions and contributions. Thank you. So let's get started. Mr. Anthony, let's get started on the theme, innovative and non-traditional funding solution for pharma businesses. And Mr. Samuel Donko will be speaking on the subject, classical funding challenges in pharma business. So the floor is yours.
Thank you, Madam Moderator, and to our viewers and our listeners. We welcome all of you. Then once again also to members of PIWA, which is Pharmaceutical Importers and Wholesalers Association, whom I'm represented here. I want to say thank you for giving me the opportunity to serve you and be here to speak on your behalf. Classical funding challenges for the pharmaceutical sector. Yeah, that's a very broad topic indeed. But let me start off by taking viewers through what I will call the pharmaceutical chain. Others may also call it the road of the pharmaceutical sales. So that will put things in proper perspective for most of our members. Yes. First of all, for pharmaceutical products usually come from manufacturers. And from the manufacturer, either it's locally manufactured or it's coming from an externally manufactured product, which means the product is being imported into their country. So they will export and it gets to the importer. From the importer or the locally manufactured, it gets to the wholesaler. From the wholesaler, it ends up with the retailer. The retailer now sells to the public. Sometimes through the route, it also moves from the wholesaler's end and it gets to the hospitals and the clinics, the various pharmacy departments, where it is also made available to the patients or the consumers. So when we are talking about the supply chain, we should get to that. We are looking at importers, manufacturers, wholesalers, retailers, or hospital outlets. That's the way we put it. So what are the challenges? I'm sure looking at the chain that we described, I would want to practically start this discussion by looking at the classical challenges that will be faced by a typical pharmaceutical retail sectors. Because the retail sector seems to be the end point for which the product would eventually get to the final consumer. So what are the challenges that we have with the pharmaceutical retail sector? I'll tell my little story about pharmaceutical retail back in 1997 when I started pharmaceutical retail business. How did I go about it? Out of my savings, out of some funds I had, I could go in and rent a shop space. Having rented a shop space, you go through the pharmacy council, get a license approved. You put your shelves, everything in place. That is where probably your own capital will end you. But we had an industry or a sector where traditionally we depend on wholesalers or suppliers for credit. So the pharmaceutical sector has been known traditionally that when you're in the retail sector, you need to fall on the wholesaler, the importers, or the manufacturers, get the goods on credit, then you intend to sell. If you take that into consideration, then what it means is that the business at the retail end is actually being funded from your own capital, which will be your equity, and that of the wholesalers and retailers have been funding the industry for so long. So how do you then address the retailers pay the wholesalers or the manufacturers or the importers? Then comes what we usually have in the industry as post-dated checks. So based on a certain trend of sales you have, you anticipate that next month I'm going to make sales of this value. The following month I'll make sales of this value. You do the purchases, then you give post-dated checks. And I think that has been a classical challenge for the industry. You anticipate the sales, you write post-dated checks against it. Something happens, the sales do not go as anticipated, then you start having these checks being returned. Or we use the term in the industry, bounce checks. These checks start to bounce. I've had an opportunity to visit a retailer, a wholesaler and importer, volumes of bounce checks I actually have. So the question one will ask is, why do retailers or the community pharmacists rely so much on credit from the importers and wholesalers, not from traditional funding, not from the financial institutions? The answer is simple. When they go to the financial institutions, at the interest rate that they will be charged, let's assume that you are even giving the loan for 30%. That comes to 2.5% per month. 2.5% per month. If he's going to hold credit for 3 months, you multiply that to 7.5% extra cost to him. If I can get a supplier to give me product virtually at no extra cost, at no funding cost, for 2 to 3 months for me to pay, why go to a traditional financial institution to go and pay that? Don't forget that times back, we used to pay about 48% interest rate, which translates to 4% per month. So just multiply that. So the industry, which is the retail sector, that we need to look into funding. And that is where, if the funding is done appropriately, it would have the ripple effect on the importers and the wholesalers. Then eventually get to also get to the manufacturers. It's where we have a basic problem. The retail sector, it is not adequately funded. And most of them depends on the funding from the suppliers, which is the wholesalers or the importers. So once a problem is created at the retail end, now I would want to move into the pharmaceutical importers and wholesalers, or the importers and the wholesalers, which can also extend to the wholesalers. What would be the challenge for you then? So then the issue that comes up is that as an importer or wholesaler, you bring the product into the country, you hold stocks of the product, it takes you time to take the product to the market. But as the product gets onto the market, it takes a lot of time for the funds to come in. And that means that you have what we call a very long trade cycle. The trade cycle is what the banks are going to look at. When I make funding available to you today, when do you expect to get the money back? So for a typical wholesaler or an importer, this is the problem this is the problem that they will face. Once the goods come, it will take you 3 to 4 months to sell, and you give it goes to the retail, and it takes another 3 to 4 months to get your money. That means the actual time or the trade cycle, we are looking between 8 to 10 months. This is something that a number of financial institutions are not very comfortable, because compared to other industries, they do not have these challenges. When they make money available, they expect that you sell and you get cash, and immediately you make payments. So why is it that the pharmaceutical sector, a very strategic sector, a sector that deals with an essential life-saving medications, why are you struggling to make cash? Why do you have problems with liquidity? Why are you giving your goods out on credit? Why does it take so long for you to get the monies back? Then the financial institutions will struggle to understand. Give you any trade terms that maybe within 3 to 4 months, we expect you to clean your account. There will be difficulties coming from the checks that may not be coming, that may return or bounce. That could be one of the challenges you will have. Secondly, some of the payments you do not even know when it is coming. And let's also note that there's a huge chunk of market out there with the government by way of the hospitals and clinics who are funded by the National Health Insurance. So you bring in a product, you supply a hospital or clinic who is dependent on an external party, which is the National Health Insurance Authority. Time back, we could have debt outstanding at 15 months. We've even had 18 months before. Today, presently, it is better. It could be 6 to 8 months. But even that, 6 to 8 months, who comes in to close the gap? You bring in the product, you supply a hospital. If you are being paid in 6 months' time from the hospital, let's take into consideration that gap that we have. So the trade cycle itself is a major problem and a challenge. There are a lot of financial institutions find it very difficult to come to terms with, because they have products that have been structured for the general market. A market that expects you that when you bring in product, within a month or two, you should have your money. And our sector will not be able to comply to their expectation or will not be able to meet the expectation. And when that happens, it's always a problem between the pharma industry and the various financial institutions.
Thank you so much, sir. So next on my list is Mr. James Orakatete from Fidelity Bank. He will be speaking on the topic classical funding models for pharma business. Sir, the floor is yours.
Okay, now let me pick the conversation from where my colleague started, and thank you for the question, and thank you for the introduction. Now, just a brief background. Banks, as we all know, are, let's say, aggregator of funds. So we source our funds from deposited funds and other sources. And then basically, it's like mopping up from those who have excess, and then on lending to businesses that would need it. What that basically means is the funds would have to be made available to those deposited whenever they want it. And so we need to be careful on how we handle those funds. Now, what it also means is, for us, we need to be able to understand the dynamics of the various sectors we deal with so that we understand how, as he said, their cycles are, when they sell, how long it will take them to get those monies back, and how they will even get those monies back. I mean, we appreciate the fact that the health sector and the pharmacy business would need some level of funding. And for us as a Ghanaian bank, that is also dear to our hearts because we are a Ghanaian bank, and whatever happening in the Ghanaian economy, I think is something we need to be concerned about. So aside that, we know they need funding for what? Sometimes working capital support, sometimes to buy equipment, and a whole lot of things that they will need the funding for. From where we sit and from where our experience, we've actually looked at various lending models. I mean, these are models that we've experienced, and based on that, we've been able to arrive at something that really we believe works for the pharmacy industry, at least. Now, basically, it's also important that whatever products or solutions we come up with, we make sure we do the necessary research, because the whole essence of a solution or a lending product is for it to be able to meet the needs of the people or the businesses we are giving it to. Otherwise, what's the point? You know, so we are very, very, very customer-centric in terms of how we start some of these things, to be able to understand what is happening in that sector or that business, so we can structure something appropriately. Now, in terms of the various funding models, I'll start by saying, just as I said, banks traditionally would aggregate funds and lend out. So the first model obviously will be where the bank itself uses its own funds to lend to these institutions. Now, as I said before, it is important that we understand the dynamics of these sectors, because remember, these are people's monies, so that when we lend them out, we will be able to, get these monies back and then give it to them as and when they want it. Now, in terms of rates, as he just said, there are a lot of factors that would influence the rates, and that I will not go into too much. But the first model I'll say is banks lending directly with its own funds. Now,
okay, so James, when it comes to pharma companies, what do banks normally look out for in lending money to them?
Well, in terms of what we look out for, I was going to address the models so that when I finish the models, maybe I can look at that aspect of what we look out for. But basically, so the first model, as I said, is where the banks itself uses its own funds. Now, another model would be where we enter into, let's say, a hybrid form of lending, where we collaborate with other DFIs, the development financing institutions, who are also eager to promote business in certain sectors. And so once you collaborate, what will happen is you co-fund using both parties' funds, and then try and drive business in that sector. Now, that arrangement can always have an impact on interest rates because, fine, the bank is sourcing its own funding from somewhere. The DFI is also bringing funding from somewhere. Now, if that funding source from the DFI is at a lower rate, you can always dilute, and it always has an impact on the interest rate. In terms of risk, it also lowers the bank's risk in the sense that for some of these DFIs, they are specialists in those sectors that they want to drive in. And so once the two of you have something in common in that sector, what it means is there's expertise, there's technical assistance. So it's not just a matter of throwing money out there, but there's the expertise to go with that to support the business, so that we're ensuring that whatever structures that need to be put in place, whatever hand-holding that has to be put in place, is actually put in place to ensure the business will be successful, all things being equal. So I'll say the second one is the hybrid model. Now, there's a third one that I'll say is the guarantee funding model, where, for example, it's also a matter of we have another institution who is ready to absorb some of the risk in that sector. So they are collaborating with you to be able to absorb some of the risk so that we can lend to that sector. So the objective of all these is to try and drive business in particular sectors, really. That works well for both parties, really. So those are the clear funding models that I wanted to talk about. Now, in terms of what we look out for, there are a number of factors we look out for. I am sure a lot of people would say for banks, all they look out for is the collateral. But really, collateral is the last thing on our minds. As somebody would say, in quotes, forgive my language, we are not a real estate company. So it is not our interest to be foreclosing on people's properties. That's not objective.
But without collateral, you don't secure facilities.
Pardon?
Without collateral, you don't grant facilities.
No, that is also a wrong perception. Now, for us, the first thing we look at is the ability to be able to repay. Because as I said, these are people's monies that we are lending. And for us to lend it, we need to be sure that you can repay. So there are certain things we'll ask for. Those things are all with the objective of trying to assess your ability to repay the monies you're asking for. So the financials we ask for, the cash flow we ask for, some of these things are just to be able to assess your ability to repay.
But people can cook that.
Yes, we know. We know sometimes people can do that. But there are various ways we can look at these things, and we know when somebody is cooking. I mean, the second thing we would also look at, aside the ability, is the willingness. And willingness can be explained through a lot of ways, for example. Now, the willingness can be seen from, first of all, the people behind the business. Are they people who have a history of not wanting to pay facilities when they take one? What is their demeanor when it comes to meeting regulatory requirements? Because remember, when it comes to the pharmacy business, there are certain requirements we are supposed to meet. You understand? So that is also an aspect we would like to look at. Now, before you come to borrow from me, remember the business is yours. You set up the business. How much money have you put in? Because you need to be able to believe in what you are doing, to put in a substantial amount of money as investments in the business, so that my money from the bank is just supporting you to meet your objective. So it shouldn't be the case that you are relying on the bank's money to fund everything. So we will look at that as well. So for us, I think that, as I said, the main thing we will look at really is your ability to repay, and then your willingness. These are very two critical things that we look at, all tied into the other things that I've also mentioned.
Okay, but there is this school of thought that banks are unwilling to support startup businesses. What will you say about that, sir?
When it comes to startups, instead of looking at it from the angle and say banks are not willing, I would rather say what is in the interest of a startup business, really. You are now starting your business. Probably you've gathered some little savings that you want to use to start the business. At that stage is an idea. You are now putting the ideas together to try and then see how it works. At that stage, we believe what you need more is some hand-holding. So you need some hand-holding to polish up the idea, to see the kind of corporate governance structures you put in place to make these things work. Now, if you want to start at that stage as well, remember at that stage, mostly when you start a business, you are not profitable. It takes you some time to break even before you become profitable. Now, if you go and take on a debt, remember debt can be expensive because you pay an interest rate. Now, it may end up, the debt may end up taking over all the monies that you make, assuming you are even making losses. From day one, it means you are in crisis. So when you are starting as a startup, we advise that you start through other means. So you need the capacity to make sure you're putting the structures in place.
Can you name some of them?
You need, if there's a soft grant somewhere, if you have some relatives, if you have any other form of subsidized facilities,
so if you don't have
that
relatives
can
who
help,
can assist,
that can do. No, you see, I'm just speaking generally when it comes to startups, and that's the reality on the ground. When it comes to Fidelity itself, there are certain things we've done with startups. We've organized or worked with some consultants to put some startups together. Of course, we do some assessment, identify some key startups that we believe in, depending on the work the consultants have done. And we take them through a capacity building, as I said, to build their capacity, and then make sure that they need to put in place certain structures. Now, when they are going through those kind of training and hand-holding, it is preparing them to making sure that they are ready to get to a stage for finance, for example. So we are making sure that we are helping them build the capacity, build the structures, put things in place, and getting them ready for lending at a future date, because that's when they will need it. And that we've done. We even working on something that looks at, how do we call it? We call it Fidelity Young Entrepreneurial Program, where, you see, the objective is looking at the young entrepreneurs and trying to build big businesses for the future. And so these are businesses that we'll pick. We believe in them. We've put them in some kind of capacity training. We have consultants to work with them. And we, the bank ourselves, we are working closely with them to ensure that we'll build them up to a certain level before you introduce them to debt. Other than that, you introduce them to debt at an early stage, and they may not even survive to see the future.
Then it will be hard for a young entrepreneur coming up, because most of them don't have families, don't have relatives who have that capacity to assist them. So when it happens like that, I believe the next people they can fall on is the bank.
There are actually other institutions they can follow. And these are people who are ready. In fact, there are a lot of people out there who are ready to put their monies in businesses.
Some of them don't know. All they know is the bank.
Yeah. So it's part of the services we offer. So what will happen is, if you approach us as a startup, that is what we'll do. I mean, we'll engage you and then really handhold you and then send you to some of these agencies that we believe can help at that stage. You understand? So it's not a matter of throwing you into debt because you've come to us, but how do we even support you at that stage to direct you to the right place to go for that support at that stage and at that level?
All right. Thank you, sir. So we have Mr. Antonio Uswanan, who will be speaking on the subject, private equity and partnership in pharma business. Sir, you have the floor.
Maybe let me start off from where my other colleague panelists ended, and then also to kind of piggyback on what Mr. Donko said earlier on. Just like Mr. Donko was talking about the value chain in the pharma business, in the financing business, there's also a value chain of financing, if you want to put it that way. And the typical value chain of financing can be likened to life in itself. So you think of it as a baby that comes from conception and then is born into life, grows and dies. So you can think of what my colleague here was talking about, that you made mention that people will say that banks do not finance startups, it's just for the simple reason is that they are not structured nor are they positioned to support startups. And I'll use the life cycle analogy to kind of explain it. So when an idea comes into somebody's head to start a business, it is like a woman getting pregnant. It's a seed. So that seed gets incubated in the mother's womb, right? So businesses will go through the same thing. You get an idea in your head, then the idea has to go through some kind of incubation, some kind of process. Then after incubation, you're giving birth. So that is when basically the business is now established, it's opened an office, and it's about to start its life. But when the business starts its life, it's like a toddler. And a toddler must be given baby food. So if you go to a bank and tell the bank to give startup money, it's like trying to give fufu to a toddler. It just doesn't fit. So there are other forms of financing and support that is typically appropriate for a toddler. So in the financing world, the same analogy applies. Then the baby begins to grow very fast. And then when he begins to grow, there is also a different type of food that you need to give that baby. So again, in the financing world, there is, a class of financing institutions who provide food to that business or baby within that stage. Then the baby becomes, a strong young man who now knows what time it is. Let's put it that way. And that is when my fellow friend here will come in. So they will be looking for businesses who are now young men, well-educated, they know what they are doing, they are earning their income, their cash flows are predictable, so that when he gives that person a loan, to a larger degree, he can predict what will be the outcome of that business. So my industry, which people would typically call the private equity or venture capital industry, we typically will look at the baby from the time he was born to the time he becomes an adolescent who is running. And then when he becomes a strong man, we hand him over to our fellow bankers to take them on. So if you look at that value chain, initially you have what we call incubators. And what the incubators do is basically, just like I described with the conception analogy, they incubate businesses. So at this point, it's not about you need money and an interest rate of this and that. It's about what is your needs, what is appropriate for you, and how can we assist you so that you get born in the first place. Then once that you are born, at the toddler level where you are beginning to go up, then we come to what we call accelerators. So accelerators are saying, okay, the business has been born, it's got a year or two under life, but we need to accelerate what? Its growth. So the accelerators will do their job. Then when they are done, they will hand them over to the likes of me, which we call the VC or venture capital industry, and to a larger degree the private equity industry. We then take that business, we fix it, we grow it to the point where they are now strong enough to eat fufu, then we hand them over to...
So what's the difference between private equity and banking?
The difference between private equity and banking can be described just like I have described in the life cycle stage. That where we normally focus at the stage of the business's life cycle can be different. We focus mostly on the early stages of the business's life cycle as opposed to the matured stages of the business's life cycle. And the reason is that equity or private equity or venture capitalists, we don't give loans. We provide equity. So i.e., we become your partner. Our funding is not a transactional funding where we give you money and say 2 years, come and give us back our money. We give you money and we become your partner. So if I'm going to give you money and I want to be your partner, I want to come in at the point where you have potential for growth. I don't want to come in when you're already matured, you know your way of life, and you can tell me what you want. At that point, fidelity will be very nice for you. But I want to come in where you're still trying to figure out what to do. And I can, through my own assessment, understand that you have the potential what? for growth. So the difference is that we're looking for growth, we're looking for innovation, and we provide financing which is not a loan. Financing that makes us partners of the business. Now, a lot of people normally get apprehensions when they hear about private equity people saying that they take partnerships. But our partnerships, to a larger degree, I liken it to a marriage with a divorce date. Every private equity guy will enter a business and will tell you the date in which he will divorce you. So we come in, and typically between 5 to 7 years, we are out. So our funding is also long-term. So we have patience, we build with you, we make you bigger than you were before, then we exit. He also did make mention of banks getting their sources of funding from deposits. Now, a deposit in a bank is what you call a demand deposit. So somebody walks into the bank, he wants his money, you have to give him back his money. So what that means that they cannot go very long because there's always demand on their cash from depositors. The money that we use typically comes from what we call sophisticated investors. So they will give us money for 10 years. Sometimes they add 2 more years to 12 years. So we have 12 years to invest the money without somebody coming back for what? For the money. Whereas they, on a daily basis, people are demanding their money. So typically they will do maximum 3 years or worst case scenario 5.
Yes, it's long term.
Exactly, but we could do 5 years, we could do 7 years, we could do 7 years. So there are different things that we do differently based on how we are positioned.
So what do private equity investors look out for in making a decision to partner someone in pharma business or any other business?
Okay, so as I was saying, we don't do interest rate. We go in when you are young, and let's say if your business is worth 100 cedis today, we want to grow it to be 500 cedis in the next 5 years. So we look for businesses that have potential to grow or scale. So that when we put in that 1 cedi, 5 years from now, we can take out 5 cedis. So we don't talk interest rate. We talk return on what? Investment. And the return on investment we want is the same return as the promoter wants. Because remember, we are partners. So if we are partners, why should you get more than I do? We should get the same based on our what? Percentage equity in the business. So the key thing we look for is the potential for growth. That's the first thing we are looking for. Now, in doing so, we also ask ourselves, let's say it's a retail pharmacy shop. There are so many retail pharmacy shops in Ghana. So if my friend here comes to me and says he's looking for private equity funding for his retail pharmacy shop, the question I'm going to ask myself is, why you? What makes you different? Can I make you a game changer? If everybody is growing at 2x, can I grow you at 5x? So those are the type of questions I'm going to ask myself. What is so innovative about what he's doing? What makes him stand out for me to be able to tap into that growth? So he did mention something about some of the challenges about their cash conversion cycle being 8 months. If he comes to me with a strategy and say, you know what, one of the key challenges in this industry is that cash conversion cycle is 8 months. But I have come up with some IT system that could do just-in-time inventory, or I have developed something innovative that can shorten that cash conversion cycle to say 6 months or 3 months. Then I'm like, okay, I want to go with you. I'm going to give you money. Let's implement those things and make sure that we can grow you 5 times X whilst everybody else is growing at what? 2 times X. So our funding is more solution-oriented, looking for challenges and looking for innovation solutions around that challenges that will allow the promoters that we back to grow faster than anybody else. The other key thing we look for is the character of the promoter, which my friend here also mentioned. Because our type of funding, like I said, is like a marriage. You don't go into marriage without knowing your partner.
So, sir, can you partner a startup business?
Yes, we can partner a startup business. But then we have to first know that the promoter is the right person to start that business. Because somebody says, okay, let's do cocoa and sell. Everybody can do cocoa and sell. So the question I'm asking is, why you? What makes you unique? Have you done cocoa before? Have you sold? Do you have some innovation solution for selling cocoa? Are you going to make something in your cocoa that will make you stand out? So whatever the promoter is bringing on board, be it his experience, be it his thought process, be it his relationship management and the ability to work for, we look for all those things before we make a decision. So to summarize it, I can say we look for two things in viability. What we call the business viability and innovation, and the entrepreneurial viability. If we can ascertain these two things, you are more likely to be our client.
All right, thank you so much.
You're welcome.
We have Mr. Frank Redu from Ghana Cooperative Pharmacist Credit Union joining us online. Sir, you're welcome.
Thank you very much.
So now the turn of Mr. Derek Ewuzi Odom from Farm Access. I hope I had it correct.
Yes, you did. You got it correct.
He will be speaking on other innovating funding models for pharma business. So we would like to hear from you.
Okay, so thank you, Madam Moderator. Well, Farm Access is an organization that is set out to improve health systems so that no one is left behind when it comes to access to healthcare. And we try to do this by being innovative or using technology, because we believe that technology has the potential to revolutionize the healthcare system and bring more impact. And as part of the programs or the approaches to achieve this, Pharma Access set up what we call Medical Credit Fund. And Medical Credit Fund, I can say, is the only blended finance organization that is focused solely on health in Africa. And we operate currently from 5 countries: Kenya, Nigeria, Tanzania, Ghana, and also in Uganda. Now, so what we do really is to provide funding alternatives. And broadly, what we have 3 ways of doing this. The first is what we call partner lending. I'll just give brief explanation or exposition on these. And the second one is syndication, which is very known out there. And the third is what we have christened direct lending. And in Ghana, Medical Credit Fund has been working with partner banks or partner financial institutions. So we are mostly using our, our partner lending approach in providing financing to all players in the health value chain in the country. So you can talk of hospitals, clinics, pharmaceutical companies, that's manufacturers, importers, wholesalers, pharmacies, diagnosis centers, and all. But I guess that today our discussion is going to center mainly on pharma businesses. And I can tell you that we're currently in partnership with 2 mainstream banks in Ghana, universal banks, that's Fidelity Bank and Republic Bank. And we are providing typically term loans, overdraft, and we have also come up or designed innovative products that we call receivables financing. And here we actually discount receivables or claims from either the National Health Insurance Authority, the claims from them, or even the private insurance companies in healthcare. And we pre-finance the claims so that you meet all your liquidity needs. You know, like my earlier colleagues mentioned, it takes quite a long time for businesses to get paid these claims, and therefore they have liquidity crunches. They are not able to really meet their short-term needs. And we come in with this product to ensure that you have funds available for your day-to-day operations, to meet payment of salaries, to purchase inventories and to do everything that you want to do, sometimes even to buy equipment, you know. So we are able to do this. Again, we are currently looking at coming up with a digital product, or we call it digital lending. We believe that the current situation where mobile penetration or mobile money penetration is so deep in Ghana. I mean, yeah, in Kenya has shown the way, and Ghana wants to follow suit. And we have a lot of people using mobile money, even in paying for services, including healthcare, and also purchasing drugs from pharmacies and here and there. And we think that, you know, lending can also be innovative, can be made easier, where you can also scale up easily, reach out to a lot of people, you know, and make more impact, because we are a development finance organization. We are set out, or we are set up to make impact, you know, in the lives of people. So mobile-based digital lending is something that we are looking at, and very soon, in a matter of weeks, I mean, okay, maybe a month, we're coming up with a product or a funding approach where businesses can access credit and loans using their mobile wallets. They don't need to be physically present in the banks or go to anywhere. Just using their phones, they can access loans and pay very easily and very comfortably. And so the other one I want to talk about is our direct lending, where we, without partnering with any bank, we are able to provide funds from up to CD equivalent of $100,000 upwards, up to about $2.5 million. We provide this directly to operators in the health space, including pharma businesses. So broadly, this is what I'll say that we do. Currently, the digital lending is being operated in Kenya and to some extent in Tanzania and probably in Nigeria. Ghana is following suit, and very soon we will be able to serve a lot of the pharma businesses with this product.
Okay, Dr. Derek Redu, in Kenya, we realize that you are offering a lot of services, whereas in Ghana, we are a bit limited. Some of the offerings in Kenya are standard for quality improvement, loans for healthcare providers, health financing, and then research and advocacy. So why is it that the Kenyans are enjoying it, but we Ghanaians, we are not? Can you please throw more light on it?
Yeah, thank you. That's very interesting. The thing is that all the other things that you mentioned about quality improvement programs, health financing, and the rest, actually, Farm Access Ghana is providing all these services. So when it comes to quality improvement, we have a program called Safe Care Health Standards, which we have reached out to currently close to 300 healthcare facilities in Ghana who are under the program. And so to add to that, we don't just give out loans. And so the healthcare financing bit of it is what the Medical Credit Fund is spearheading. And that's what we do. And we don't just give out the loans. We accompany every loan that we give out with technical assistance, which we call it Quality Improvement Program, which is done through our Safe Care standards for quality. And so we are deep into it in Ghana. Maybe you don't hear a lot about us because per our setup as a development finance organization, which is not for profit, we don't go out there doing a lot of media adverts and all that. But when you go on the ground, we have a lot of partners. So if you've heard of the Christian Health Association of Ghana, which is CHAC, it has a membership of over 325 or 45 health organizations facilities. And we have a partnership too, and we are providing quality improvement program from all these providers under CHAG. If you've also heard of Mary Stopes, Mary Stopes Health Franchise, we have an agreement with them which we provide quality improvement. They have over 100 facilities that they also serve. So in Ghana, we are doing so much. And actually, within our network, Ghana office is noted for doing very well when it comes to quality improvement program. Maybe the other countries like Kenya, Tanzania, they have embedded a lot more in the system because of other things such as, health insurance fund or systems that we are able to help country to set up. In the case of Ghana, we already had our health insurance scheme or health insurance authority, and so we provide, advisory services and help the system to be more efficient. And so you may not hear a lot from it. That's why we developed a product called the receivable discounting using the health insurance claims. And we are doing a lot more in the system. I mean, since the past 2-3 years, let's say even 2 years since 2019, we have granted credit facilities to over 100 pharmacies in Ghana. And we also provide financing to Mr. Donko's members, PIWA, importers and wholesalers. We have quite a number of them.
So is it the same interest rate as the bank or is it a bit lower?
Well, so the interest rates that, is offered under our program, it's not too different from what the banks provide because we do it in partnership. But as my brother James from Fidelity indicated earlier, our rates, the rates that are provided under our program are always between 2 and 5% lower than what the banks provide on the market. So, and that's, I'm sure he's here. Yeah, he can tell you.
And even to add to what he just said, if you look generally at the rates in that book, you realize that is one of the lowest, it has some of the lower rates in the facilities we've granted. Because as I said, if you remember, in the model I spoke about where we co-lend, it helps drag some of these interest rates down. And even depending on the amounts, we can even go down further. So nothing is cast in stone. It's actually within a certain range. Yeah. And even within the range, it's low comparatively. Yeah. And maybe to add something small was complement some of the things he said. Now, it is true. Even if you look at our pharmacy book, I think I was just mentioning it, it is about 48 to 50% of our health sector book. So health sector book, we have hospitals, we have clinics, we have diagnosis centers, all these together. Pharmacy alone is about 48 to 50% of that book. So that tells you we are learning a lot to the pharmacy side of things. Now, earlier on when we were speaking, you mentioned collateral, and I tried to tell you that that's not the main thing we look at. We try and structure deals even without collateral. And within this arrangement that we have, we knew we would have small businesses who would have challenges with collateral. So what we sought to do is really sub-segment the solution for our pharmacies and in the health sector. So we realized that for some of, depending on the amounts for the smaller businesses, mostly the smaller businesses are collateral free. When I say collateral free, we don't ask you for tangible collateral for those facilities. So that has really been thought through in developing that solution for the health sector and for the pharma business. So that really takes care of that. And for me, I think the one important thing that is worth mentioning that Derek has said is the financing of NHI receivables. Because remember, prior to that, we have a lot of pharmacies, a lot of clinics, a lot of hospitals who take the NHI card. They have to wait for NHI till whenever they pay. That is money locked up with NHI till they pay. Now we are able to give them money today whilst we wait for NHI to pay. Then, they can pay off those facilities that we give them. So we are making monies available, liquidity available to them today, whilst they don't have to wait for NHI to pay. So those are, some of the key innovative things that I think is making an impact within the health and in the pharma business sectors.
Interesting to note that you are doing account receivable financing, especially with respect to NHIA. My concern now is, if the service providers of NHIAs are usually the hospitals and clinics mostly, if you are doing that much account receivable financing for them to get their money ahead of time, that is not reflecting in our books as the wholesalers and suppliers of products to these hospitals and institutions. So how do you ensure that when these funds are made available to them on time, they in turn make it available on time also to us as suppliers? Is there a back-to-back arrangement? Can we do a back-to-back arrangement? Or could we also present these same institutions to the medical credit financing that we have account receivables pending with these NHIA service providers? So can you also fund us as against them? Then probably when the payment comes, you would realize that you may not need to even finance them, but you would need to finance the suppliers.
Yes, so thank you, Mr. Donko. The point is, indeed, we don't only provide hospitals and clinics. You know, most of the pharmacies, they also, quite a number of them, they take NHI cards. So we are able to directly finance some pharmacies. When it comes to your members, it's a bit difficult because I think you don't directly subscribe to NHIA. You supply to maybe the pharmacies and also the hospitals. Well, when we have, discounted or pre-financed these receivables, it will be very difficult for us to say that we will hold or retain the funds and give them to you. But what we can do is we can collaborate. Before we grant these, liquidity gap financing solutions, we also get to know their creditors.
Perfect.
Okay, and sometimes we reach out to some of these creditors to do what we call confirmation of the amount and even how long or the aging of these debts. So yes, we can do that, but in lending, you need to be very careful. You can't on your own decide that you want to hold back or retain somebody's money because you think that another person is owing. But when we collaborate and we do positively, I think we should be able to reach some consensus where you may get informed through other means when these providers of facilities have funds available to them. But I wanted to add that pretty soon, the Medical Credit Fund will be in a position to, on its own, grant some funding or financing to operators in the pharma business and also in the health sector at large, in the sense that we will be able to provide this financing at much lower interest rates because of an approach that we're going to use this time around. So you should look out for us, maybe if not during the last quarter of the year, beginning from next year, you see a lot of these businesses getting funds from Medical Credit Fund or Pharma Access at appreciably low rates than currently they are accessing.
So, Derek, do you have a financing model for startups?
Okay, so, I think my previous colleagues have spoken at length about startup, but Medical Credit Fund or Pharma Access.
Pharma Access is an NGO, so obviously it's different from
Well, so Kate, yes, you can say we are NGO, but I need to quickly also indicate that the funds that we lend out are not grants or donations. They are investors' funds, which have to be repaid within a certain period. There is an aspect of our work that is also subvented by our principals that got to do with our operation, but it's not really about our lending. But when it comes to the lending, it's really not donors' funds. It's money that we have to pay. So our approach, our understanding about it is not too different from what my previous speakers has said. But we have in mind, actually, Farm Access also has a sister, or has one of its programs, where we set out to assist people with equity. So long as we're able to do equity funding, you position yourself to be able to help startups, okay? And we've not been very active with that vehicle in Ghana, but it is something that we can use when the need arises. Our position when it comes to startups, and when we train, we train doctors, we train pharmacists, we train all the professionals in the health space.
And is it happening here in Ghana?
Yes, we do. During the CPD, the pharmacists and doctors who do the continuous professional development training, we have been licensed to do that. And a lot of them, they come through our training. And we tell them when it comes to startup funding, we inform them that, like Tony rightly said, you don't use debt financing, okay, for startups. If the debt is so low in terms of the cost is very low, and then the tenure or duration is also very long, then it could be admitted. But a typical debt where the longest duration is 2 years or 3 years, if you want to use that for startups, you could find yourself in a problem. So yes, we currently do not do startups, but our advice is that there are quite a lot of avenues that people who want to start businesses in the pharma business can make themselves available to. And we have what you call the private equity investors and the venture capitalists, as Tony mentioned. You also have angel investors, okay? Angel investors are people who have quite a lot of money and they want to help businesses and they look out for certain things. Maybe we don't have a lot of time to go into it more, and they are ready to give you a longer time for you. Normally, they don't even ask for return, but they ensure that the business grows. They handhold you, and they make sure that the business grows. With time, if the business does so well and probably you want to pay back, yes, but they don't really come to you to ask for you to pay back. And we have a lot of them. And then there is also crowdfunding. Crowdfunding is not really being used by a lot of Ghanaians, but crowdfunding on the internet, through Facebook, through other social media networks, people are able to mobilize a lot of funds to start businesses because you sell out your ideas, okay, to people, and you're able to mobilize there have been a lot of crowdfunding activities in Africa especially, where people have mobilized over thousands of people, and they contribute, say, $100, $10, $200, and these funds or these monies aggregate into millions, and they use it to start up businesses. It's a great opportunity that people have to use, and it's really yielding a lot of results. So these are some of but even when it comes to the banking, there are areas. So people take overdraft and they use it to purchase fixed assets. So there's this kind of disparities, and it's all about how you get to appreciate, financial management. And as part of the work we do, we provide advisory services, support, and also financial management training.
Right, thank you. We have Mr. Frank Redu joining us online from Ghana Cooperative Pharmacists Credit Union. Sir, you're welcome.
Yeah, thank you very much, Kate.
We would like to know what role does Ghana Cooperative Pharmacists Credit Union play in funding pharma business?
Okay, so thank you and good evening to colleague panelists and then everybody watching us. I would say that the cooperative credit union plays quite an important and a lot of role in supporting pharma business. To start with, I heard many talking about startup capital for pharmacies and things. It's on record that the cooperative credit pharmaceutical credit union has supported members in the startup of their businesses. This is true, and there are a lot of evidences to support that. By our model, the way we operate, so we can lend this support to the member pharmacist who is desirous of starting his business whilst also working elsewhere. And this has been done over the years. We also provide short to medium term loans for pharmacies and pharmacy businesses. And this is by way that as a member of the credit union, you have access to a loan of up to 200,000 cedis for your business to support purchases of assets and other things that you may require. We also have the import support loans for farmer businesses. This is a quick access to 50,000 cedis that we grant to farmer businesses in order to support the clearing of their goods from the port. And these are available for members who are mainly pharmacists to make good use of. Currently, we are looking at moving into the acquisition of vehicle space. We realize that many pharmacists and small pharmacies may need some vehicle to help with the movement of their goods and also distribution. When you go to the banks usually will require a brand new car, which many small businesses find difficult financing or going with. So we are looking at how we can get a fairly used vehicle that can support these farmer businesses and will spread the repayment over time. So when it comes to support for farmer business, the credit union, since its inception, has been in a very strategic position to support pharmacists and their farmer business. You know, when we talk of farmer business, majority of them are the pharmacies in the communities. And these are mainly the ones that we support. In recent times, we're also extending the support to small businesses for them to also take advantage. We know the credit union is mainly for pharmacists and its allied professionals in the medical space. And we also know that society is evolving. One unique position for the credit union is that it's made up of a number of members who are mainly pharmacists. So we understand the pharma business and we are colleagues. We operate on the different levels. Pharmacy, financing of business is also evolving. Risk is an issue, and many of the banks usually look at a lot of. I heard Kate mentioning collateral, whether if you don't have collateral, the banks will not lend to you. It may be true, but in the credit union spaces, you don't insist on collateral. In fact, we don't ask of collateral. It's a self-guarantee where a member guarantees the loans that you are taking. Just a little insight. Realize that society is changing or evolving. Now the teachers have their teachers fund. I heard the military also have a certain funds that they give to their personnel. So GCPCUL is a finance arm. I prefer to call it the pharmacist bank. It's a finance arm of pharmacists and pharmacist business. And once we turn our eyes to that place, I'm sure it can really help us to grow. And once we know ourselves, then the issue of risk is minimized and the issue of collateral can also be waived off. So what is a credit union? Just for a brief, for my colleagues who may not be aware, the credit union is a member-owned and member-controlled. Before you can access any funds, you need to apply to become a member. You need to buy shares in the union. And with the minimum of 300 cedis, you can buy the shares and be a part owner of the company, if I want to put it that way. And it is a member-controlled because at the AGM, then we now elect the members who we want them to run the affairs of the union for a period of 4 years. So if the sort of managers or directors are not managing them well, then of course we have the options to kick them out, so to say, so that new managers now come on board. So once it's a member-owned and a member-controlled institution, decision-making is also decentralized. As a member of the credit union, you are part of the decision-making and strategic direction of the business. And this is done by the majority shareholders at the AGM.
Okay,
And of course, as we are all members, we all have equal rights. The credit union is not for profit organization, it's not for charity, but it's for service. Since profit is not our main driver or aim, our rates are very competitive and relatively better than many of the other financial institutions. When I say better, I mean that the lending rates are lower than mainly the banks. Then the interest on savings are also higher than the banks. Then the other aspect or benefit is that at the end of the year, when surpluses or profit is declared, then there is a percentage that is shared for members because we are all shareholders of the company. So in short, the credit union is playing a very important role in the pharmaceutical space. We say that it is the pharma bank because we know ourselves. Many of the members are pharmacists. You can access a facility with the credit union, and within a week, no collateral is asked, no risk is analyzed, and we just give you access to your money because once we are in the same profession, we know how to take our money.
Okay,
And
Mr.
we said that
Redu,
how sustainable, yes.
I would like to find
You
out,
wanted
is
to
it
ask a question?
short-term loans or long-term loans that you give to your members?
Okay, so we don't give long-term loans. Our loans are mainly short terms and then medium terms.
Okay, does it
When I
come
say
with
short term,
any
that's
interest
within a
rate?
year.
Does it come with any interest?
Yes, of course, there's an interest that it comes with, but the rate is very competitive because we are not for profit. The profit is not the main driver, so our interests are usually below what the commercial banks are charging.
All right. Thank you, sir. We have an online question to Fidelity Bank. So someone wants to know, how long does it take to assess loan from your end?
How long does it take? Well, it's important to say that, of course, there are requirements. And so if you are able to submit all the requirements and we have everything, it should be able to take us maximum 10 days to give you a decision.
Really?
Yeah, it should
10
be able
days.
to give you a decision. That's why I said once you've submitted all the requirements. You see, sometimes there are requirements that are maybe, let's say, 10 things you're supposed to submit. The moment you submit 3, you say you've submitted and you start counting. That 3 things will not allow us to make a decision. And so what we'll keep on saying is we will need you to add the rest to make a decision. But once we have everything, we should be able to give you a decision within 10 days.
Okay. All right, thank you.
Yeah, but, quickly, so just a bit of clarity. So getting a decision may not be the same as getting the loan disbursed. Okay, but what is important is that the bank would have indicated to you that the loan has been approved.
Exactly.
And that's exactly.
Okay, so this is to Antonio Uswan and private equity. Can private equity companies take over the business or become majority shareholders of a business? Someone wants to know.
Well, the answer is yes and no. Yes, in the sense that we provide equity and we take an equity position or become partners of a business. Now, if at the time our normal disposition is to try not to be a majority shareholder. And the reason for that is that we want the promoter to continue to feel that it is his business and for him to be in the driving seat. and to drive the business. We become partners who advise from the back, and we can get involved once in a while, but generally, we want the promoter to still be in charge of the business. And so for that reason, we like to take a minority position so that the promoter can still be in charge of the business and drive the business. But that said, most businesses, small businesses that we deal with, the SMEs that we deal with, may not have a very strong balance sheet. So for example, maybe your balance sheet is $100,000. And then I put in $500,000. Immediately, just by balance sheet valuation, without going into any cash flow or NPV valuation, my money is bigger than yours. So automatically, I become the majority shareholder. So yes, we can be majority because often the businesses that comes to us have very small balance sheets. But the position we would like to assume, all things being equal, is to have a minority position.
Okay, and then another question, how would a regular small-scale business get to benefit from all these funding opportunities to equity? I don't know how.
Yes, I mean, private equity funds would typically have a fund. There is a manager, then there's a fund. So like Impact Capital Advisors, we are the managers. And then under our management, we have funds. Every fund will have its thesis. And what we mean by the thesis is that the investors who give us the money to manage will define what we have to do with the money. So if your business that you are bringing to us does not fit the thesis of a fund that we manage, then we cannot help you. But if you fit the thesis of the fund that we manage, then we can help you. So currently, we are managing a fund called the Industrial Support Fund, where we provide between $100,000 to $1 million as equity investment in small businesses. And this Industrial Support Fund is meant to support businesses that are into manufacturing. So if you are a pharma business and you are into retail, we may not be able to assist you. If you are into wholesale, we may not be able to assist you. But if you are into manufacturing, then you fit the thesis of the fund. So we then take you through the typical requirements that we look for, and if you're a good fit, then we fund you.
Okay.
Yes, it's good you've entered into the industrial section. Currently, as we speak, Pharmaceutical Importers and Wholesalers Association, belonging to the Chamber of Pharmacy, have acquired Dawa Industrial Area to set up what we call the Pharma Park. It will be the first of its kind. And we have our 15 companies from our mates who intend to move into manufacturing. A lot is ongoing there, but the question is, we are transitioning from importation now to move into manufacturing. And that's where we will need support, where equity comes in. And if it happens, it will be very nice to see a very good industrial park, having all the facilities supporting all these factories at the same place. We are also going to thrive on, there were so many synergies, packaging materials, everything on the same park. Water treatment site and everything, we'll have all of them on the same, the Pharma Park we are talking about. That is where we would also need support, and we have been looking for the kind of support. But like you rightly said, $1 million is not the kind of money that will enable us to be able to move from importation into manufacturing. And these are areas that we expect financial institutions to look into, because indeed that is an import substitution strategy that eventually will help this country in terms of foreign exchange, pressure on our foreign exchange. Let's assume that $450 million of products are imported into the country this year. And these importers, the 15 importers, and we know that some may join later, who have expressed the willingness and desire to move into the Pharma Park, are to be given support. What eventually may happen is that we would reduce this import of about $400 to $450 million, coming down to somewhere maybe $250 to $300 million. That is significant savings in terms of pressure on foreign exchange.
Yes, Mr. Donko, I think you are on point. We are aware of the Dawa Industrial Park. Actually, I will be visiting that park on Friday. So we are aware of the park. So the reason why currently we are only providing up to $1 million is as a result of the size of the fund that we are currently managing. we have what we call size limitations. Yeah. So the current fund that we are managing, the target when we set it up is to have 3 times what we are currently managing. So as into when the fund size gets bigger, we will be able to extend much bigger amounts to businesses. But for now, the maximum we could do for one single company, it's $1 million USD. So if you've got some of your members who are investing their own money and they are looking for equity around $1 million, and we think that they are a good fit for us, please send them to us and we'll take a look at it. Okay, so to Fidelity and Pharma Access, what are the modalities for direct lending to hospitals? Why not collaborate with a bank to do so? That's an online question. So probably the person wants to know what are the modalities for direct lending.
Okay, so I spoke about direct lending. So what I meant by that is that we are currently partnering, or I'll say we are liaising with financial institutions to be able to make the funds available to the pharmacies, the hospitals, the clinics, and all the players in the health value chain. Like I said, there are some of the banks or the institutions that may be precluded from granting some loans because of maybe low risk appetite or because of certain risk frameworks that may not permit them to do so. The board may have one reason or the other. I mean, it happens. I may not be able to give all these because of our time limitation. So what we want to do is that in such situations, because of our expertise in the health sector, and because of we've garnered a lot of experience in what we've been doing, so we want to go ahead and probably give these facilities or credit to the pharmacies or the importers without the involvement of another financial institution. That is what we term as direct lending. And so it would mean that just as, the same as the requirement that you may get from a bank, but it's a bit maybe flexible. In terms of collateral requirements, it's also a bit flexible because we will be in a position to do loans with what we call 50% security coverage ratio. A bank may not do anything less than 100%. And so we will be in a position to do that. And that will give a lot of reprieve for the players in this sector. So that's what I meant by direct lending. But it also involves being able to give loans through digital means, okay? Using mobile-based wallets. So for instance, if Prime Pharmacy had as part of its payment options, accepting mobile payments or mobile money payments, you build a wallet. And what we want to do is that we want you to be able to use this wallet to access loans directly without any physical intervention. Do that loan application on your phone, get payments into your bank account directly. Okay, so this is also direct lending that we seek out to do in the next few weeks and months.
All right, thank you. So to James Rakatete, online question. Someone is also asking, considering the rates you guys charge on the loans, it is very difficult for repayment. So the person wants to know, when it happens like that, it becomes a bit of a challenge because your interest rates are higher and all of those.
Is that pharmacy business?
Well, I would know.
And basically what I'll say is we can engage. So if the person can reach out, I think I give out my contact. If the person can reach out, we can engage because we don't have a one-size-fits-all approach. Rates, there are a few things we look out for, including the risk of the transaction as well. Yeah. So as I said before, I think I've said it here as well, depending on the amounts and things, there are rates that we can give that are quite low. And I don't know if I gave the average here. That, I mean, we've even lent at 19% before in this partnership arrangement that we have. So it will be good to reach out so we have an engagement, know exactly what the need is, and then we can make progress.
Yeah, but Kate, just a quick one. Because we are partners, I mean, in this, actually, on the contrary, the portfolio, the health portfolio of Fidelity Bank, I mean, with the Medical Credit Fund involvement, I dare to say that it is actually the best performing in terms of portfolio quality.
It is.
Derek, you also made mention, okay,
that gives some level
conclude
of,
and let's...
that gives a lot of comfort.
Yes.
This arrangement.
Confidence.
That's why I said it's important that they reach out, because nothing is cast in stone, and I would not say there's nothing that can be done. We've done it so many times. So it's good for the individual to reach out.
So what I wanted to say is that a lot of these health facilities or health providers on this program are actually able to pay. And even if you have issues, you need to reach out to us, and we discuss. We've had to reschedule and restructure a lot of loans, I mean, based on the reasons that are ascribed, you know. So it is not as if people are not paying. If it is the best performing portfolio, then it means that people are really paying well. Yeah.
Okay, let me just also ask a question. You mentioned the health. Can you make a distinction between the percentage of that loan that will actually go to the pharmaceutical sector directly, so that we know that the pharma sector constitutes this? Because for me, what I'm looking at, or what we are looking at, is that we need to get 1 or 2 banks in this country that would really take pharmaceutical sector serious. 600 million USD worth of business, that's the pharmaceutical sector. And this is a business that when we talk about too, we are dealing with products that are sustainable, essential items, medicines, or pharmaceuticals. Even when, for most of the countries, almost all the developed countries in the world, when there's a financial meltdown, when there's a recession, the last sector to be touched is usually the healthcare sector and the pharmaceutical sector. So you don't go wrong by investing into the pharmaceutical sector. But how come that you go to the banks, they don't have pharmaceutical desk? We don't have any bank saying that we are going to specialize and go for this 600 million USD worth of business and create a pharma desk where we will specialize and be able to give the best of facilities and the best of rates, preferential rates. Because when you come out boldly to say that we believe in the pharmaceutical sector and we want to invest in the pharmaceutical sector, what you do to send that message is that if we are lending to the one who is importing confectionaries, the one who is importing other products at 24%, I'm willing to give it at 18% because we believe this sector is sustainable. We believe this sector, no matter what, even under COVID-19, the pharmaceutical sector was still operating. When all businesses were shut down, all the retail pharmacies were open because people matter. People care about their health. They still want to go out there and get the medicines. So it's something that we feel the financial institutions should pay close attention to and create a pharmaceutical desk. 1 or 2, all of them cannot do it, but we need to have specialized institutions like what you have started. You've done very well. Fidelity is also saying that, yes, because of that, their health sector loans are doing better than most of them. People are paying than others. But I think we can do more if we narrow it down to the pharmaceutical sector. And secondly, we try to build expertise in that area. Then you will understand our businesses very well. And you will not be found wanting any time when a pharmaceutical company comes to you that I need a loan, but I cannot pay you the first 3-4 months of the loan. There should be a moratorium. Because even in biology, we learned about gestation period. So sometimes when you look at the trade cycles of these businesses, you may need to even give them 6 months for the first time. Looking at the time the company is going to import the product. Some products, when you import, the lead period is 14 weeks to 16 weeks. And if you don't understand the pharmaceutical business, you understand 4 months before you send the money to the supplier, you are getting your goods 4 months before it's ready. Except it takes another maybe 6 weeks. Before you even get the goods into the country, 6 months is gone. So if you are lending traditionally, the person cannot pay. He's going to default. This is where we are looking for institutions that are willing to look into that and give that kind of specialization.
Thank you so much, Mr. Donko. So to Fidelity Bank again, do you have a targeted credit funding model when it comes to pharma business, as Mr. Donko was saying?
Maybe briefly to speak about what Mr. Don, because a few comments about what he said. And when it comes to things like moratorium, I don't think, or I don't believe it's not extended to our pharmacy area, because it's all about the cycle. It's all about what we are. So that's why I started by saying we've built some level of expertise in that sector through this partnership. And so there's a lot more we can do. I mean, giving moratoriums is not a challenge, it's something we do. So that would not be a problem. Now, to move directly to your, and maybe to also add that I think I said it earlier, that if you look at the health sector book, about 48 to 50% is to the pharmacy side of things. So we are doing a lot with the pharmacy business. And if you say a model that we prefer, well, I think I spoke about 3 models. And based on the experiences we've had, to enter into a specialist area like the health sector and like the pharmacy business, I'll say the hybrid model. And that's why we are in this partnership with MCF and Farm Access. Because for me, as I said, apart from the fact that we are giving out money, we are co-sharing the risk and everything else, there's this technical assistance that also goes to the institutions. So what it basically means is we are not just throwing out money to a pharmacy or to another health sector institution. It comes with some level of support and handholding to ensure that really the structures are there and that they are doing what they are supposed to do to be able to, repay some of these facilities. And so for me, the key benefit of having this kind of co-lending arrangements is it just doesn't happen because we are throwing money. There's more to it, and it gives more, apart from the level of comfort in terms of risk that it also offers. And that is what has, led us to do so much with the health sector. Due to certain structures and our level of understanding of the health sector now, that's why, one of the reasons why the health sector book, as I said, is one of the best performing. And maybe in the beginning when I spoke, I did say that we always seek to understand the dynamics of a sector because that gives us a better understanding. And so when we are lending, we know that the purpose for which we are lending for is a good purpose. It will generate the necessary cash flows to be able to help the business.
I think our institutions or the banks can do more, so we will just plead with you to extend your...
Oh no, definitely. I'm not sitting here to say we've done it all and we've arrived at where we are supposed to go. But I think we've made huge progress looking at where we started to where we are. And I believe MCF will bear me out. We've made huge strides, and it is our objective to carry on because we really want to make an impact in the health sector and then within the pharmacy side.
Do more.
So we agree.
Hear from
not to hold breath for my fellow bankers here, but I think there's always an axiom that says that numbers don't lie, human beings do. So if you take a typical bank, there's a cost of capital. The cost of capital for a bank, risk-free, probably 16%, prime rate, Bank of Ghana 16%, which means that he cannot lend the money to you less than 16%, no matter what you do. If that's the case, he will just give it to Bank of Ghana, sit down, fold his arms, and at the end of the month, you collect his 16%. So he's starting from a specific benchmark. The question then becomes, you, the pharmacist, and I'm throwing it back to the pharmacist, you have a cash conversion cycle of 6 to 8 months. So that means that all this time, inventory is being held. And within that period, there's an inventory holding cost. So if we add up all that inventory holding cost, he probably needs to lend to you, the maximum he can lend to you is probably almost equal to your inventory holding cost. So there's not really that much wiggle room for the banker to continue to drop your interest rate. The challenge I would then throw to the pharmacist is to say, have you yourself sat down to see if there is any innovative things you can do to reduce that cash conversion cycle from 8 months to, let's say, 6 months or 4 months, so that you start fitting between the numbers of the bank. But if we always throw the problem back on the financing institutions, there are limitations within which we operate. So I'll throw it back to the pharmacist. Can you make that 8 months, 7 months? Can you make it 6 months? Can you make it 5 months? What are the innovative things that you could do? And if you can do those things, then everybody is happy and the marriage will happen. And I always say that financing or banking is like I'm selling jollof rice. You come to me and I say, I don't want to give you jollof rice. I'm selling jollof rice. So if you fit it, I will give it to you. So often it's not like they don't want to give the money, but your business model does not necessarily fit the numbers that they play with.
Okay, thank you. So do you have something to say? Yeah.
Okay, thank you for that. I think we as an industry, and I will speak for Pharmaceutical Importers and Wholesale Association, alongside Chamber of Pharmacy, we actually collaborated with even the Pharmaceutical Manufacturers Association of Ghana, which are manufacturers. And from 1st June, we tried to tighten it. So we came up with very stringent credit policies, which have been in effect from 1st June. But the fact is that traditionally, it's been a canker, it's been a chronic disease that has been there for years that you are trying to cure. It wouldn't happen overnight. But there has been drastic improvement, and we'll continue to fine-tune it as we move forward. But as we speak with you, we are doing very well. But if you remember, that was why when I started my presentation, I went back to the retail pharmacies. Because the retail pharmacies that are supposed to respond to our policies will need support from the financial institutions. So that's why we need to have a solution, because if they are well-resourced or well-financed, then we can cut down the delays in payments from their end. But most of them are also, when we started the policy, some of them were found wanting. Because over the years, all you need to do is to get a place, and you are giving goods on credit to sell. And you should possess a check. That it's happened for many years. Now you come and say that the credit period is going to be 2 weeks. Maximum people will give you maybe 1 month. It is very tight for them. And remember, medicines always have a connotation of security issues. If today your child is sick, you're given a prescription from the nearby hospital, you run 1, 2, 3 pharmacies, you don't have a particular medicine. You go further away to get it and come back, unfortunately it might have happened. So even though we talk, the issue of access is also important. They need to have the medicines in the pharmacy. Can you have them? If we are talking about proposing solutions, some of the solutions we could propose easily is that these the financial institutions can start working with the importers and the wholesalers. Those who supply them, open up a credit line for them, so that when we supply them, you may end up paying us while you can sort an arrangement like that. The question is that most of them might not be, your interest rate might be a bit harsh for them at the retailer's end. But if you approach a wholesaler or an importer, let's say Osmon's Chemist, East Cantonment Pharmacy, NS Chemist, and discuss with them that when you supply these retail pharmacies, we would in turn pay you maybe in 2 weeks or 1 month. The interest rate that would have been passed on to the retailer could be absorbed by the importer or wholesaler in the form of a discount arrangement. Yeah. When a system like that is put in place, it ensures that cash flow is improved because there has been a financial intermediation. Otherwise, they won't come because they also don't want to come and take the 20, 30% per annum. But we, the importers and the wholesalers that are filling it, could have an arrangement like that to ensure that the retailers get their goods at the regular prices and they are still able to deliver. Then we can have an arrangement behind the scenes with the financial institutions that will do the intermediation. These are some of the things that, if you ask me, I would suggest. But we are doing our best to streamline the industry. But it has been a chronic disease, and when you are treating a chronic disease, you just don't go in and give it a shot and get a cure.
So James, what will you say to that, please? Okay. Derek.
Yeah, so Mr. Donko, and thanks so much, Tony. You hit it right. Now, Mr. Donko, you mentioned about credit line, and that's quickly, it draws my attention to some interventions, solutions that already we have put in place, and we are trying to improve upon them. Currently, we have a credit line product that we have also set up. It is not yet for importers of pharmaceuticals or wholesalers, but currently it's with those who still supply, they are subscribed to the National Health Insurance. So we have set a credit limit where based on 70% of your claims, we advance you the credit line, and then when claims are paid, it liquidates part of the loan, and then the allowance is created, you take it up again. So, like you said, in actual sense, your effective interest cost reduces. Okay, because of the short periods within which you pay these loans, and then you take additional ones. So within a year, you'd have taken so much funds to do more, but in terms of the actual interest cost, it becomes less. I think it is a great idea. It is something that we can build on to also include the pharmaceutical importers and the wholesalers. And so we will take it up from here. But quickly to also mention, before Kate comes in, is that as part of Pharma Access's improving access strategies or approaches, we have designed a project called Med for All. So Med for All is actually a digital medicine supply chain. It has never been done in the whole of Africa. And we have started with the top 4 pharmaceutical manufacturers and importers in Ghana. I don't know if you are aware, but probably I will engage you more on this. We are actually bringing on board a lot more of importers and not only manufacturers, but importers and wholesalers on this to increase the number of suppliers on this platform. It addresses the issue of accessibility, quality, and affordability linked to this platform, because in most of the times there have been physical supply chain systems where goods are actually hoarded, kept physically. This one, goods are not kept at any point, any place. When the good orders are placed, the suppliers have maximum 2 weeks to deliver to the health facilities. And if they have enough funds to pay, they have up to 30 days to pay. If they don't have their own funds, the Medical Credit Fund, together with Fidelity Bank, we've created an avenue where we can give you credit, okay, to pay for this, whilst we wait for the NHI to pay you. We want to extend it to other maybe private health insurance operators. And so this is something that we're doing. It started just about 6-7 months ago, and it is scaling up. We are going to add over 100, facilities on board. So this is something that
extend it to the private sector.
Yeah.
Don't
Wonderful.
limit it to the NHIA.
NHIs, yeah.
Well, you see, when you are taking on a project of this magnitude, you need to always
You need to
pilot.
start from somewhere. We
You need
do
to
agree.
pilot to understand the dynamics well.
That we understand.
So, like I said, we are scaling up. We started with only 30 providers and 4 suppliers. Now we are getting on board almost 12 or up to 20 more suppliers, and then we'll be scaling up. So, yes, these are some of the interventions that we're bringing into the system to help make the system run smoothly with less, hitches.
And honestly, when he was asking the question, I was constantly nodding and then taking a quick glance at Derek, because I knew what he was saying was linked to exactly
Oh, yeah,
what is. It's just that, as he's saying, early stages, so we have to start at a certain
No, but it's
level.
good. At least you
But-
have something.
but it's
Now
in-
that we are aware,
It's actually interesting in places like this when you hear these things, because what it means is it gives you the comfort to see that we are doing something right, which will have an impact.
okay, so Frank is on the line and he wants to contribute to our discussion. Hello,
Right.
Frank.
So thank you. Yes, Kate, I'm here. Thank you very much for the opportunity once again. And then I was listening to pharmacist Samuel Donko, and I could feel the passion with which he was making his delivery. By my simple analogy is this: in our various homes, if somebody, a neighbor, come to you for a soft loan, what will you do in order to give this neighbor the soft loan? What will be the evaluation point? Question is that if the neighbor is somebody that you really know very well, giving out that money to the neighbor wouldn't be too much of a bother because you know the neighbor. It's about knowing your customer. In the same way, if you do not know the neighbor too well, of course, it will be difficult for you to pass your money to the neighbor because you'll be looking at the risk associated with all of that. That is the question that I'm asking pharmacists. The banks are structured in a way that unless, as Mr. Donko is saying, they have a specific pharmacist desk or pharmacy business desk. Other than that, they will be considering all the pharmacy application and requests in a pool. And the question is that how well do they know the pharmacy business? Do they really know the business that they can comfortably lend to the pharma business without looking at the so many risk models that they are associated with? So what I'm driving further is that we have a sleeping giant. The pharma business has a sleeping giant in the credit union. Over the years, I don't think we are paying so much attention to it. But if the pharmaceutical industry, the pharmaceutical players should turn their eyes and focus on the credit union, I think that most of these problems will be solved because of the various models or various things that are enumerated earlier. Because it's like a bank for pharmacists. So once pharmacists are running that bank, then of course they understand the business, and many of these challenges wouldn't come in as we are now facing with the traditional banks. This is what I want us to turn our minds and focus to and see what we can do. Currently, we are not too big a player, so we cannot compete and give some tickets, big ticket size facility. But if we should all come together, and I'm sure we will do very soon, then it will be like a pharmacy bank to support the pharma business in this country. And I think the pharma business in Ghana will go far with that. This is what I want to bring on board. Thank you, Kate.
You're welcome.
Let me say something to support you. I think the pharmacy credit union will be very good, especially for pharmacies that are young pharmacists and others who are trying to come up with their community pharmacies and try to, this would be a very good avenue to access funding. As most of you have said that you need to start somewhere, you need to be established. They are very cooperative, they are very supportive. I've been with a credit union, pharmacy credit union, for so many years. Right from the day I opened my pharmacy, I've always been there, they support. The limitation is that they have a cap on what they can give out. And therefore, they can only give out up to 200,000 Ghana cedis. That's as far as I know, unless it has been reviewed. Then they have an emergency loan that they give to importers who have goods at the port they want to clear. That they also have a cap of 50,000 Ghana cedis. So it's a good beginning. You can always count on them. And professionalism is always there because they understand the business. That's, I would say, to support. But it will get to a point in your business that you cannot depend on them. You need to move beyond it because when you are, for example, you need a loan of $500,000, $1 million, and others to import, we need to come back to you. Talking about the manufacturers, we have the Dawa Industrial Park, where people are looking for $5 million, $10 million, thereabout, to be able to set up some factory. There, we also have to rely on probably on the equity financing bit. That should come from Tony, your end. So you have to scale up and you all have to take it quite serious. Like I said, above all, the businesses, pharmaceutical business, one fact about it is that we may have all our challenges, but it is still a profitable business. A business that can pay its loans, a business that can pay the various interests that the banks charges. Just that we need the banking institutions or financial institutions to understand this.
All right, thank you, sir. Please, do you have something to say?
No.
Okay. So we would like to acknowledge our sponsors, Fidelity Bank, Farm Access, Prime Pharmacy, Canal Hand Sanitizer, and Ozone's Chemist and Ghana Cooperative Pharmacists Credit Union. Thank you all so much for sponsoring Pharma Business Forum. So in conclusion, if any of you have something to say before.
Yeah, maybe a few words. I might say, as I said, we started from somewhere, we've made huge progress. And the health sector in general is a sector that's been dear to our hearts. And the pharmacy side of things, I mean, is no exception. And clearly it is telling in our books, as I said earlier. It's been a learning curve as well in this engagement. And there are a few things that we'll take on board as we leave here. And for me, at least, it was very, very refreshing when, as I said, he referred to certain things that I realized that, okay, there's something happening that is good, that probably will have a huge impact on the pharmacy or pharma businesses. So in all, it's been a good session. There are a few things, as I said, we've picked. And I know we've made huge progress, but there's still a lot out there that we can do to support the sector. And it's something that we will continue to do. With that assurance, I'll give you something that we'll continue to do. I mean, outside this forum too, anybody who wants to have further engagements, I think we are open to that. I gave my number out. I don't know if we can give that out, again. But we are available for further engagements after here. So just a few things.
Maybe I also want to thank you guys for putting together the forum. It's been interesting. We've all learned from the various panelists. Maybe what I would say is to Mr. Donko, we at Impact Capital Advisors, we have the Industrial Support Fund. So like I said, it's focused on manufacturing. We might have ticket size limitations currently because we can only do up to $1 million. But that doesn't mean that we can assist. There's always the ability to do co-funding or syndicated funding. So who knows, maybe a bank might be able to throw in some $1 million for working capital, and we might be able to throw in another $1 million for equipment or marketing, some expenses that are not time-bound per se. There's always a time-bound, but within the limitations of your business. So we also welcome your members to apply, those who want to go into manufacturing, and if they're a good fit for what they do, and especially with COVID, what we call the post-COVID effects, we've come to understand the essence of ensuring that some basic medicines are manufactured locally so that whenever there's an emergency, we can all respond to that. So basically, that's what I'd like to say in conclusion.
Okay. Yeah. Okay. So I will also add my voice to thank the organizers of this forum. I think it's been very refreshing. A lot of things have been exposed to us. We at Pharma Access, our commitments to helping the health sector and also the pharmaceutical sector, especially to improve and scale up and do more and be more efficient is unwavering. And you can see it from the various interventions and the programs that we've come up with. We are able to give loans up to $2.5 million equivalent in Ghana cedis. And depending on the purpose, it could go up to about 7-8 years, And to tell you a bit about commitment, just briefly, over the past 2 years, I think almost 60% of the loans that we have given out have all gone to the pharmaceutical sector, the pharmacists and the importers and probably 1 or 2 manufacturers. That should tell you where our attention is. So we are open for business. I'm sure our numbers have been shared. You can approach us. Our office is in East Legon. Come to us and let's discuss how we can help you scale up your businesses. Thank you.
Thank you so much. This has been an insightful and engaging discussion, and we wish to thank our resourceful panelists and all our sponsors, and most of all, our organizers for making this possible for us. There'll be a follow-up to this to create a tangible product and solution. So as you said, your number will be on the screen, and then people can contact as well. Thank you all for watching.